highest risk does not mean highest return.
What's your sense of what investor sentiment has been like?
Happiness or sadness for an investor is from which lens he's seeing. I would be very happy even at 24,000, 5,500 levels, because that's a great news on Nifty levels.
Many of those who have been waiting for the correction, waiting on the sidelines to, for some meaningful correction to either top up or to enter the market, what's the advice for them?
If you're investing in mutual funds, I would allocate the small cap and the mid cap portion in a little staggered fashion for the next 4-5 months. Large cap allocations have to be done very soon and capitalize on the 7-8% fall from the peak. That's on the mutual fund side. On the stock side, you have to be very specific. Never get carried away.
Hi everyone, I'm Avni Raja and you're watching Invest Smart, a show where we talk about all things related to your money, your savings and your investments. Well, the Festival of Lights is here, but the recent stock market performance seems to have dampened the festive spirit. Now, there are multiple reasons for this, from geopolitical worries to disappointing corporate earnings. But on Monday, the 20th of October, that's when we're recording this show for you, there was some recovery. However, what does all of this mean for you and your investment strategy in Samvat 2081? Joining me on the show is Feroze Azeez to answer all of those questions. Feroze, welcome to the show, and first of all, wishing you a very, very happy Diwali.
Avni, good afternoon, and I wish you the same. We wish every viewer a great festive season, and may prosperity and colors always be filled in one's life.
Thank you so much. But Feroze, obviously the run-up to Diwali hasn't been that great at this point in time. Like I was saying, some relief on Monday. But overall, what's your sense of what investor sentiment has been like? A correction was expected. I mean, you've been saying this in the last several shows that we've had over the past year, to expect some kind of a correction. But what's your sense?
See, I need 2-3 points. One is, I think when we're looking at data, you can look at data from either sides, glass half full, glass half empty.
Yes.
Of course, like you rightly pointed out, the markets are not at the peak, right? Markets about 7.8%, lower 7.6% on Nifty, lower than the peak when we are recording this show.
Yes.
Now, that's one way of looking at it. The other way is from Samvat, for the full year of Samvat, what was the return? That's a very rosy picture. It's the same end point. Depends on where you took the beginning point. If you took the beginning point of 26 September 2024, which was the peak of 52 weeks, you might want to choose to be unhappy. So happiness or sadness for an investor is from which lens he's seeing. I would be very happy even at 24,000, 5,500 levels, because that's a great news on Nifty levels. On broader market, if you look at the kind of performance and the extra return which this Samvat has given us, the one which is going by, is phenomenal. There's been an alpha of almost 25% of mid-cap index and small-cap index, give or take, relative to Nifty. And that's an outperformance I'm speaking about, which is greater than the absolute return in most years. So that's the second good news of why I would be very happy this festive season.
Okay.
The third, the future looks brighter too. The number of people who are acknowledging in India that the India growth story is something which they will have to participate is far more. So I think future looks bright, but market has this habit of correcting 10% every 9 months. That's the historical evidence. हर 9 महीने में 10% गिरेगी market. एक बार.
Absolutely. So if we sort of look back at the last few times we've seen corrections, they've been quite short-lived, and the following rally, in fact, has led to newer highs. This time, given the factors are both domestic and global, whether it's the FIS pulling out big time, below expectation corporate earnings, or geopolitical worries, do you think we could see a deeper correction going forward?
Avni, I don't see a very deep correction. Firstly, let me use this word deep and define it, because this business is all about mathematics. So deep corrections I define as 20% plus from peaks. That's called a deep correction for me. All right, because if we don't define, then we are all on the different page of what deep means to Avni could be different than a viewer, then could be Feroze. So if you believe in my definition of deep, which is 20% falls from peak, which implies somewhere around 20,500 and more of Nifty, because 26,200 is the peak, 0.8 times of that, which is 20% lower, is somewhere around 20,500. If any correction beyond that, I would call it a deep correction, because that's a 20% fall. That's a very rare event. Is there a probability of that? The answer is no, in my opinion. 99% no. Okay, 1% तो कुछ भी हो सकता है, right? 2% कुछ भी हो सकता है. Data as it presents today. Even on the election day, counting day at 11 in the morning of 4th of June, I said that 21,000 is going to be the base of Nifty. Looking at three very strong data points, not intuitions. FII had sold 1,36,000 crores in cash market. They were 89% short in futures market. DIIs had deployed lesser money than what they had received. Retail had not done too much margin funding. This combination implies that the market is light. If the market is light and goes to 21,000 because of counting, I would think a bounce back happened from 21,200 and we saw 26,000 in a very short span of time. As of now, where we stand, FIIs have continued selling in October, and almost 92,000 crores has been sold in October till a couple of days back for the first 23, 24 days. But the good news is in September, they were the only month where they were positive. They were 13,000 crore positive September, and October they are negative. If they were negative in September and also in October, then it's a different connotation or different interpretation. So I would see that the FII selling will slow down in very, very soon times, especially after the US election. You will see redeployment of capital. That's my guesstimate.
So does that mean at this point in time, many of those who have been waiting for the correction, waiting on the sidelines to, for some meaningful correction to either top up or to enter the market, what's the advice for them?
So that's a two-pronged advice. One is, if you're investing in mutual funds, let's assume we are speaking of the first kind of investor, which is mutual fund. You can definitely invest most of your funds which have large cap heavy nature. If any fund which has 60-70% in large cap, don't even worry if you've got 7-8% from the peak as a discount, a festive discount, first time we are getting after years. Diwali discount is there. So use that and buy Nifty for funds which have large cap allocations. Broader markets, I think, is still skating little on thin ice, given the geopolitical uncertainty and the kind of valuations they've thrown up after this rally. So I would allocate the small cap and the mid cap portion in a little staggered fashion for the next 4-5 months. And we'll want to have the US election behind us and the resultant sentiment behind us. Large cap allocations have to be done very soon and capitalize on the 7-8% fall from the peak. And don't worry about a further 5% fall. That's on the mutual fund side. On the stock side, you have to be very specific. Never get carried away. If you're buying a portfolio of stocks, the Nifty could be up. Your portfolio, which you were eyeing, can be down, or vice versa. So a stock investor cannot go with just the broader market sentiment. He has to, step one, decide what portfolio he's creating. Then he has to create an NAV of his prospective portfolio and see whether that portfolio has fallen. And if that has fallen, deploy whole hog. Quite a few stocks may not be. At today also, you have some stocks at 52-week high. Market is not at 52-week high. So for a stock investor, I see most people don't become specific to their desired stocks and they go by market sentiment as against what they will end up buying. So if I've gone to a market, if I'm buying apples in that fruit market, I'm not worried about what has happened to oranges prices. So in stocks, market and your commodity could have very different price movements. So always be very specific.
Right. Feroze, you spoke about US election, but here as well, Maharashtra elections are coming up. Anything on that or any way you would read that? The only reason I'm asking because it's a state like Maharashtra.
See, any state election preceding a general election is a very, very important state election.
Okay.
Like the 3rd December 2023, that was a group of state election results which got announced on 3rd December 2023, where Nifty rose from 19,500, 600 straight to 21,000, 21,500 in 2-3-4 sessions. That is because that was trying to be the barometer for the general election.
Yes.
Now that the general election is behind us, the state elections for at least the next 1-2 years will be 1 or 2 day mood spoilers or mood enhancers. They're not like, they're temporary, like smoking. They'll just give you that immediate relief of a dopamine, but they're not a medicine.
Okay, fair enough. So, for a young investor with a high risk appetite, what's the recommendation in terms of asset allocation and allocation within the equity portfolio?
Sorry, Avni, I'm so tempted to give a fundamental principle before I answer this question. We meet several people.
Please go ahead.
Okay, quite a few people. I met somebody very lately. He says, I'm a high risk taker.
Yeah.
So I want the highest risk portfolio so that I can get the highest return.
Yeah.
This is a mathematically and finance wise incorrect statement. Highest risk does not mean highest return.
Absolutely.
That is why Mr. Harry Markowitz and William Sharpe won a Nobel Prize. To prove that after a certain period, anything in excess is harmful, right? Which we say in our lives, daily lives. Anything in excess is harmful. Even water consumed more than 4 or 5 bottles a day is harmful because it washes away nutrients from your body. So Harry Markowitz and William Sharpe won a Nobel Prize to say that there is a point in time after which risk reduces return. Higher risk reduces return. So don't be under the illusion that you are a high risk taker. So take the maximum risk. You would be reducing return, let alone keeping it equal. So you have to understand which point in time you should stop taking extra risk. That's point one. It's a fundamental principle on one of the theories. There are only 5 theories of finance which have won Nobel Prize, and this is one of the theories which implies. And that's a good foundation stone for any investor to build a career of investing for 30, 40 years. Now coming to what do I recommend to a person who wants to take risk, as long as you are a risk taker plus you have time. If this is your combination, then you should have a larger allocation to small cap. If you're a high risk taker as a person, but your goal does not allow you 5 years, 10 years, then it's not worth the risk. So if that is the combination, be guided by your goal and its time frame, not by your risk appetite. Now, if I don't want to use my money for 20 years and I like to take some risk, calculated ones, which I love taking, I have time also and I have appetite also. Great, you can have your dessert. If you have the appetite, but if you have sugar, no dessert.
Right.
Like that. So if goals don't permit you those 5-7 years, be in large cap. If they permit you those 5, 7, 8%, 8 years of time, then have 30% in small cap and mid cap. Almost 50% can go into small and mid.
Okay. The other part, Feroze, is sectoral funds, which are still very much in vogue. But given the valuations and overcrowding in sectoral funds, is it still possible for them to outperform? Or would you recommend investing in a flexi cap diversified sort of fund?
See, I think yes and no. Sectoral funds, I would want to categorize sectoral funds a little broader. There is thematic funds and sectoral funds.
Yes.
Sectoral funds, unless you know when to exit and you have mathematically proved yourself in that arena, don't ever buy a sectoral. In a sectoral fund, it's never about getting the buying right. It is about getting the selling right, which most can't. So you have to sell at peaks. Selling at peak takes a very, very different emotional stability. Most people are never able to sell at peaks. So if you have that skill set of selling at peaks, and then sectoral funds are of any relevance to you as investor. Second, thematic is getting wider, and thematic is actually becoming more and more relevant. Now, for example, Nifty Capital Market Index, which buys businesses, 15 businesses, up to 20 businesses, only related to capital markets, is a theme which didn't exist till 2-3 months back. After 30 years, if a theme like this comes when India is shining, you may like that scheme. I have to also give the disclaimer that out of those 15 stock, Anand Rathi Wealth Limited, which I am a part of, is also a constituent of the index. But what I'm trying to highlight is there are themes which are being born, and themes are a little more broader in most cases. So you can, if you really love to have that adrenal, don't go straight to a PhD, finish your graduation in thematic schemes.
Yes, absolutely. Now, moving to a little bit on the primary side, we know there's a bubble of sorts building up in the SME space when it comes to SME IPOs. A lot of young investors, however, are still putting money in many of these SME IPOs and making quick money at times, especially with the way some of them are listing. Of course, one part is to warn these young investors to make sure they don't burn their fingers. The other part is that many of them are anyway going to still do it. So, for that category of people who are anyway going to do it, what is your advice in terms of any things to keep in mind?
Okay, so to people who are definitely going to SME, before which I want to give some clarification of big news which came on SME IPO collections and stuff, has something which needs to be factored in. I'm sure there were a couple of very popular SME IPOs which had a 12 crore size, collected 4,800 crores and stuff.
Yeah.
Don't get too carried away with that number, because that is a leveraged number. When you know that it's a 12 crore IPO, people put 1,000 crore application also, because they know they will not get the full allotment.
Right.
So it's a chicken and egg story, right? So don't get too perturbed that it was 4,800 subscribed. How does an IPO market work? And the last 1 hour, people see how many times is it subscribed and put an application. If it is 100 times subscribed, they put an application 100 times bigger than what they want. So it's a cascading effect. If it is 1,000 times subscribed, people will, if I want 1 lakh rupees of application, I will put a 12 lakh rupee application, or maybe a 1 crore application to get that 1 lakh if it is 100 times subscribed. So that's why 4,800 crores gets collected, because it actually does not get locked in. So that's why don't get too perturbed. In the primary market of the main listed companies also, you see that kind of cascading effect, is why some companies have a subscription of 1,000 times in HNI.
Right.
It is because everybody looks at subscription and makes their application, and vice versa. Now, coming to what should one do when you have decided to be a part of a roller coaster, you will have to wear a seat belt, right? You can't sit in a roller coaster without a seat belt. Now, like Avni says, some people ziddi log, right? They would not want to go to an app and bet on some games and matches and stuff, but you want to have your adrenal either in the derivative segment or the SME segment, which is not the right source for adrenal. There are other sources which have come up, but if you have that inclination, you have to know what is your seat belt. Your seat belt is the sign of when this can take a turn. When you see the number of IPOs in the SME segment triple from now in a specific month, that's a huge sign of you taking your money out and saying that I don't want to participate in the last lap.
Right.
Before the corrections, you will always see any big corrections, you will see the maximum application came a month before the correction started. Right? So that's one huge barometer for you to know when to quit the game. Number of IPOs. If the number of IPOs becomes so large that everybody wants to do an IPO, that means valuations are going to be very stretched in those IPOs. So that's one barometer. Otherwise, of course, you have to look at each IPO separately. But when the numbers go up, that if there were 10 happening in a month, if suddenly 30 start happening, you quit the game and wait on the sidelines for a 6 month, 1 year without getting greedy.
Right. Okay. Also, now moving to gold and silver, there have been reports of rising industrial demand for silver in sectors such as the EV space, and the expectation is that silver prices could see a significant spike. What's your view on increasing allocation to both gold and silver at this point in time, especially given the equity valuations in some parts?
See, gold valuation, because there is no PE, because PE is infinite there, because there is no earning. Right? So people don't calculate, right? It's a zero P investment, right? Unless you're going to have ornamental value or you're buying a sovereign gold bond to get the 2.5% yield. Then there is a P, which is also 50P, right? Earning is X divided by 2. So 50 years, 40 years is the P, all right? So point one, gold is also at peak valuation, point one. Point two, silver's volatility is so large that the return doesn't justify. Nifty's standard deviation is 18 or 19 for the last 1 year. Silver's standard deviation is close to 42% for the same period. Now, if
Right.
something which has 2 times more the risk gives me 2% more return, then it's not even an asset class worth considering on a
Oh,
risk reward basis.
oh, fair enough. On a broader level, if we look at the composition of investors today, India's retail investors, with 60% of demat account holders below 40 years of age, if I'm not wrong, and the geographies from where new money for investing is really coming in. What, according to you, has changed in terms of how investing is being done by today's retail investor?
One thing which is a nuance I understood after doing a small little survey amongst
Hmm.
people when I do an event, especially not the really rich, ultra rich, or the HNI and ultra
Hmm.
HNI, is to understand from the person. One thing which I realized is SIP's number, which is 25,000 crores,
Hmm.
uh, is the person there and the
Hmm.
person in derivatives is one and the same, at least 8 out of 10 times.
Right.
So the great news is the guy who's betting in derivative is also respecting discipline and doing SIP.
Right.
The inference of the market would be very different if these are different 100 set of people and this is 100 set of different people. It
Hmm.
is different set of monies of the same person in 8 out of the 10 cases. That's a
Right.
good news.
Right.
That means people are respecting both adrenal and discipline at the same time. Second, I think tier 2 has now realized that beating inflation is very critical,
Hmm.
especially because Indian government was funded by Indian households.
Right.
India has been a fiscal deficit country. Foreigner never bought Indian bonds. So what option did India have? To
Hmm.
borrow money from the Indian households. So
Hmm.
India now is self-sufficient with the kind of foreign exchange reserves and the borrowing rates. Now foreigners also have started buying Indian bonds first time in the last 1 year. So now that's why the ministry has said that in the new tax regime, we will not force you to invest where we want you to invest.
Right.
PPF, EPF, small savings, all those
Yeah.
are no more a compulsion. That
Hmm.
is because India today can permit its household to not put 80% of its money, financial assets, into debt instruments. That's one second change, and that's where a tier 2 who's not getting a tax benefit on PPF, EPF in the new tax regime is moving towards equity, and rightly so.
All right, Feroze, let's do a quick rapid fire. I'll ask you questions and quick answers from you as well.
Yes, sure.
So, two things one must do to clean up one's portfolio this Diwali, irrespective of a rise or fall in the market.
Great. So first step, count the number of instruments you have, number of ISINs. I have only 18 ISINs, and it's a reasonably large portfolio. If you have more than 18 ISINs for anything which is not triple digit crores, you're just wasting time. So consolidate.
And two sectors you're bullish on currently.
Financial services and businesses related to capital market.
Okay. Two sectors you feel are most overvalued right now.
Oil and gas and auto.
Okay. Gold or silver or both? What would you advise people for their auspicious buys this Dhanteras and Diwali?
Surely gold and sovereign gold bond if that fits into your auspicious criteria.
Okay. Would you like to stick your neck out with any kind of a prediction for the markets in the new Samvat?
Yes, I think we will retrace back the peak, which is about 9%, 8, 9% retrace, and another about 5, 7% possible for sure. So 15% from now on till the next somewhat is very, very likely.
All right, we'll leave it there. Feroze, thank you so much for joining us. So wishing you and all our viewers a very happy Diwali and profitable New Year.
Thank you.